stock in focus right now is NMDC. The third quarter earnings were mostly in line with estimates. The company also announced an interim dividend of 5.29 rupees per share. Amitabh Mukherjee, the Director of Finance of NMDC, joins us now to talk about that. Mr. Mukherjee, good morning. The numbers look fairly in line, but what can you guide in terms of a sales volume? I mean, what can it be by the end of FY20 and FY21? And if you can also give us a sense of what the exports were till date and what you could end up with.
Our original guidance was around 32 million ton for FY20. We will surely surpass that. There's no doubts about that. So, on the volume front, we are very comfortable. First 9 months, obviously, there was a dip in the prices. Unfortunately, we had headwind for the prices going south. But now in January, we have taken 2 price increases. Hopefully, we'll be making up for the revenue for that also. So, both on production and on prices, things are looking up on Q1, so that's pretty good. Export, we did around 1.7 million ton this year up to in the first 9 months. And our quota, we will be expecting exports to be around 2.7 or 2.8 range by the end of the year. So that is what our expectations for export are. We cannot do more than 3. So that is the mandated volume for export.
Okay. After this price increase that you just spoke about, how will your prices, NMDC prices, compare with Odisha miners and landed international prices?
Taking the international prices first, even after the international prices have tumbled by around $16, it's 82, somewhere around 82 right now. Our ore is still cheaper on a landed basis in the eastern coast and the western coast. That's substantially cheaper. Still, at even our increased prices and even when the international prices have dropped by around $16 to $17. So that's the import price comparison. With Odisha, we cannot compare it on a like-to-like basis because of the logistic costs involved. Generally, we are higher from Odisha, and on a mine head basis by around 15-20%. It depends on with whom we are comparing in Odisha, because there is no uniform price in Odisha. Different people charge different prices. But on average, historically we have been 15-20% higher than Odisha. But then you'll have to factor in the logistic cost, what we have and what they have. So that's not a very fair comparison to make at the mine head costs. Those are the mine head prices.
Okay, Mr. Mukherjee, so is there further scope to increase prices then? And how do you see the iron ore dynamics now, panning out in India post the auctions?
Number one, we can't speculate on prices, what the prices will be next week, a month from here, a week from here. It is difficult to speculate on prices. So we'll rather refrain from doing it. So far as shrinking market is concerned, all we can say is that for next year, actually, we are targeting a volume of 48 million ton. And that speaks of our assessment of requirement. So including Doni Malai, 48 million ton is of course including Doni Malai. So we expect that we will be able to produce and sell 48 million tons next year. So that speaks and that takes into perspective all the developments that is happening now also. So 48 million ton, which is a very substantial increase from the current year, including Doni Malai, 48 is what we are expecting.
So that's a 50% jump in sales volume. Do you think that's doable?
Of that, 7 should come from Doni Malai if it reopens. 48 includes 7 of Doni Malai, which we are hopeful and we remain positive about. So if that comes along, 45, 48, without that 41. So that is on a like-to-like basis, a growth of at least 25%.
Okay, when can we get some clarity on Doni Malai? It's been going on for some time now.
Unfortunately, we cannot speculate on that, except that all we can say is that we are positive and we are very hopeful. That we remain positive and we remain hopeful for Doni Malai.
So when will your steel plant finally get commissioned and see the light of day? I mean, any kind of timeline that you're working with there?
Now we expect the hot metal to roll out somewhere around July, August. So that is anything between June, July, August. That is the time when we expect hot metal to roll out. So the full-fledged commercial sales, I think we have budgeted for around 2.63 million tons for the next financial year. sorry, not million tons, 2.3 lakh tons for the next financial year. That is what we are budgeting. So that's about 2 months of production. Another 3-4 months of full commissioning. It takes time, 3 to 4 months, and that is what we have budgeted actually for next year.
Okay. Finally, what's your cash on books and how do you plan to utilize it?
We have already declared a dividend of 5.29 rupees per share. So that's around 529%. It's almost equal to around last year at 5.85 was 82 was last year. So 5.29 we have declared. So we had a cash balance of around 4,500, 400 as of now. And after the dividend payout and after the requirements of our working capital, I think whatever the surplus cash we had, we have almost given up everything towards the dividend. So around 1620 crores of dividend, 1171 to the government at the present level of holding, and another 333 on dividend tax, DDT. So around 1950 would be the payout, and that is almost all the surplus cash after our capex requirement and after our working capital requirement is being paid out as dividend.
All right, Mr. Mukherjee, we'll leave it there today. Thanks a lot for joining us. Before we move to next guest, just a word on the market, which is now beginning to see improvement. Mid caps clearly is the place to be in, and the mid cap